Good morning and welcome to this morning's morning market review. It is Thursday, it is the 4th of April. My name is Russell Shaw. I'm a senior market specialist at FXCM. Before we get into the live stream, I'm going to go and bring up our disclaimers. We're going to start off with our high risk investment warning. I'll keep this on screen for a few moments for you to take a read through. I'll just keep it up for another few seconds and then I'm going to bring up our market commentaries disclaimer. Okay, here's the market commentaries disclaimer. I'm going to keep this on screen for a few moments as well. If you would just take a read through that, please. Just another few seconds there. Okay, thank you very much. And what we'll do is go ahead, bring up our real rate. Here we go. This is the daily chart. And I just want to bring up an arrow here and just highlight yesterday's real rate movement. It's effectively a gravestone doji. Rates or yields, I beg your pardon, yields were pushed right up until they reached the high for yesterday, and then they were pushed back down. Yesterday was actually quite a difficult day to trade because the data was, in my opinion, unexpected. We had the ISM Services PMI come out at 2 p.m. GMT yesterday. It was expected to come in at 52.8, which would be in line with the previous print, but it came in actually softer. It came in at 51.4, and the comment behind that was there was a decline in the composite index as a result of slower new orders growth, faster supplier deliveries, and a contraction in employment. I think the interesting point there is the slower new orders growth, because new orders is a leading indicator of sorts. So the fact that the leading indicator is slowing down really pushed the yield lower. Now, why I say it was quite a complicated day to trade, because if we go back to Monday when we got the ISM manufacturing PMI, that was a beat to the upside. So usually it's the services industry which is showing strength, or as of late. But now this week the manufacturing data comes and surprises to the upside. The services data surprises to the downside. And because there is a services slowdown, so to speak, in the data, it actually led to the yield being sold off, so to speak. Okay, yield falling from its high yesterday. Let's just take a look at the real yield on a longer-term weekly basis. I've just changed this to the weekly chart, and it's really it's run higher. Okay, it's run higher for the year, and that's interesting. It's effectively accompanied the pushing back of rate cuts for this year. And I think if we continue to see the rate cuts for get pushed out further, that could adversely affect the market. But in particular, if we get a slowdown in growth, which is perhaps suggested slightly by that ISM Services PMI, then of course the slowdown in economic growth will undo all that the market wants the cut in rates to do. Now, what happened after the ISM services data came out yesterday is that the probabilities for a rate hike in June did increase. Let's just go through some charts with the understanding that the probabilities of a rate cut in June increased. So let's go and just take a look at US dollar. We'll start off with the US dollar weekly chart, and we'll work down from that. So a top-down analysis. All right, here's the weekly chart. Take a look at this. This is interesting. This is interesting. Let's just take a look at the peaks and the troughs. Peak and troughs are effectively what determine trend. They define trend. And what we were looking for is a potential higher peak in the US dollar. I was expecting the dollar strength to continue, and we just had a big, if I change this to the daily chart, you could just see yesterday there's this big sell down in the dollar yesterday. That to me was quite surprising, and it disrupted the it disrupted trading, so to speak, because when you get an uptrend or a potential uptrend, you're looking for dips, right? And you want to try and take advantage of those dips. So you can see that instead of a higher peak, we now have to ask the question, are we perhaps going to get a lower peak? And let's go through to our zone and just take a look at how the US dollar is looking in our zone analysis. All right, here we go. Here's the dollar chart on the daily time frame. And yesterday's movement didn't do the dollar any favors in terms of our trading. We were in zone 1. What we were looking for is a positive cross of the dollar yesterday. It didn't manifest. It didn't take place. It dropped into zone 2. So we've got actually relative weakness here. We've moved from zone 1 into zone 2. And that did take me by surprise, okay? So the dollar all of a sudden coming in, showing some signs of weakness. Take a look at the dollar RSI. Dollar RSI is looking to drop below 50. If we drop below 50 over here, then we go to the bearish side of the indicator, all of a sudden dollar momentum is starting to turn. And even the stochastic is starting to roll over. So all in all, the market really did not like that services data, really pushing the US dollar down. And when I say the market, I'm talking about the dollar market participants, right? And let's just go a debrief on the hourly. Let's take a look at the hourly chart because it really disrupted our hypothesis that we laid in yesterday's live stream. So just going ahead, bringing up the US dollar daily chart. Okay. Now, yesterday, it was almost a 1, 2, 3 reversal. 1, 2, 2, 3. And then what we do is we're looking for the next 1, 2 upwards. Looking for the next 1, 2 upwards. Didn't happen. Didn't happen. What happened is that the ISM data came in. It came in really softer than anticipated. And what happened was instead of us getting a trigger 1 to the upside, it pushed down. Instead of now, look at the stochastic. The stochastic here is extremely telling. Hey, Kim, good morning to you and welcome. What we need in order for there to be a swing, we need the stochastic to hit the upper quartile and hold. And if we get it to go to the upper quartile, the upper quintile, and hold, that's where the magic happens. What happened yesterday with the stochastic is it hit and it rolled over extremely quickly. And that really was telling that we were not going to get the swing. And of course, if you were trading, you would have had to put in your stop losses, okay? And stop losses would have been triggered to the upside. So just really the ISM manufacturing, ISM services diverging. So what are we looking at in terms of this morning? Well, it's going to be difficult. It's going to be difficult. Why is it going to be difficult? Because now we are in zone 2. Now we're in no man's land. So effectively, what we can do is we can wait to see if we get some sort of reference candle reversal to the upside here, but we're really being put into no man's land. Let's see how gold reacted with the dollar getting pulled back so severely. So let's go do a top-down analysis of gold, which is something that's been on our watch list for some time now. So let's just do a top-down analysis of the yellow metal. Okay, so I'm going to bring up XAU USD on the daily chart first. XAU USD on the daily chart, just to get a bead or a bearing on our daily. And you can just see how the let's get rid of the drawings. Okay, absolutely rampant yesterday. Gold was absolutely rampant, and you can see that we are in zone 1. Take a look at the Bollinger Bands. As those Bollinger Bands show expansion, the volatility in the yellow metal, in the precious metal, really showing an upside in the volatility. And effectively, take a look at our stochastic. Stochastic has been in the upper quartile for some time. If it stays in the upper quartile, that's where the magic happens. Take a look, really been a nice movement up in the precious metal. What is the issue? What is the issue here? The issue is we're getting overbought. So gold rampant, but I would be looking very carefully now at profit taking. I would also be looking for the next opportunity, which is the dip in the uptrend. I'd be looking at the dip in the uptrend. So the movement down in the dollar yesterday really just buoying the precious metal on. Let's just take a look at the weekly chart here. I'm just bringing that up. Okay, and we've got the same problem here on the weekly chart. Here's the weekly chart. What's the same problem? We're overbought. Okay, so when we get to these overbought levels here with gold, we just need to be very careful. It is on our watch list. It's been very useful as an instrument because the trend has been so strong. But when we get to these sort of overbought levels or pretty close to overbought, there does seem to be often reactions. So just be very careful that we are at a potential reaction level here with gold. Okay, so that's something to be cognizant of. I'm going to take this trend line out and take out the number 1. And what we would be looking for here is perhaps breaks to the downside, because if we get breaks to the downside, that's effectively leading to the dip in the uptrend. All right, let's just go and look at some of the risk markets to see how the risk markets reacted to that services data that came out yesterday. So just going ahead and bringing that up. We're going to start off with the SPX 500. We'll do a top down again, a solid top down. So let's just do the weekly chart. We'll bring that up. Bought, aren't we? We are overbought on the weekly. And just take a look at the sentiment with regards to, I'm just zooming in here with the last candle. Let me bring in an arrow. I want to show you exactly what kind of candle is this. This is it's a doji, isn't it? So we had bulls trying to take price up. We had bears trying to take price down, but we're effectively flat for the week. It's a candle of uncertainty. So uncertainty, really good up leg, and that's after last week's doji. So uncertainty, and we've got this uncertainty coming in with the RSI looking overbought. So I would be very mindful of a potential pullback here. Let's just go through to the daily chart, see what the daily chart is telling us for SPX 500. All right, bear with me. I'm just going to bring that chart up now. All right, and you can see on the daily chart we've slipped. When I say we've slipped from zone 1, which is our bullish area between the upper blue and the upper red. We've gone into no man's land. We've gone into neutral between the two blue Bollinger's. And we can look to see if there's going to be reference candle reversals there. I'm of the opinion that the market's at a point where it is quite fragile. It's like a Jenga tower. I think at some point the last block is going to be put on the top of the tower, and eventually it kind of collapses. We get the pullback, this profit taking, and we get set up for the next leg. And I think that is looking. That's what the market's looking like. So the fragility of the stock markets, I think, are starting to really show themselves. And it's a theme that we've been playing on for quite some time. I also want to take a look at NASDAQ, because NASDAQ is also showing some signs of fragility. So I'm just bringing that up. Okay, here we go. Just take a look at the last 2 weeks of the NASDAQ weekly chart. Here I bring it up. And we've really got a doji, really uncertainty coming in. And that's after last week's spinning top. So the theme of uncertainty really starting to show itself after a nice strong leg up. And I think that the uncertainty in the market is, well, how much higher can we go without some sort of pullback, something to really take the froth out of the market. So I think that is something that we're going to have to just keep in the back of our minds. I don't think that the uptrend is in danger of changing, but I do think there is a danger of a pullback. But I think that pullback has to be embraced, because it's going to lead to the next up leg, and it's effectively the dip in the uptrend that we are looking for. The very last chart I want to take a look at, very last chart for this morning, is DAX. Let's just bring up the DAX CFD. And again, just take a look at this week's candle. It's that, hey Raj, good morning to you, welcome. It's that spinning top, isn't it? Bulls trying to take price up, bears trying to take price down. We're effectively flat, and we've got this overbought condition. And I think that, again, the DAX probably ripe for some sort of pullback activity. Let's just take a look at it on the daily chart. We want to look at it in terms of our zones. And the DAX, well, this is quite interesting. I'm just going to bring it up for you. It's still in zone 1. If you are risk seeking as a market, as a trader, if you're risk seeking, perhaps you'd be looking to see if there's a dip in the uptrend here. I would be very mindful of the fact that we've got this spinning top on the weekly, and we overbought on the weekly, but we are in zone 1. What we could do, we could just go down to the hourly chart, and we could just see if there are any signals that are generating on the hourly. But in my opinion, I think that you've got to be very careful. Yeah, put in your money management strategies, put in your stop losses. Even on the hourly chart, just as we move to the market open, it just doesn't look as if it is conducive to a long position. It's actually rolling over to the downside. So that's a trigger 1 to the downside. Here's a trigger 2 to the downside. And if we get the DAX falling through to the lower quartile, then I think that the risk off sentiment is really starting to take hold, be very, very careful here, guys. I think that the market's, as I say, starting to look like that Jenga tower. I can think of no better metaphor. Okay, that's as far as we'll go today. Tomorrow, I'm not sure. Tomorrow might be our last live stream. I am just working on getting videos together. I'll see if we can put one together on Monday as well, but I think Monday is the last day. So just be careful or be cognizant of that. And I'll try to get some videos up as a interim replacement for this. In the meantime, we internally are looking at other ways to do live streams. So thank you very much just for your patience there. All right, let's wrap up here. If you found that useful, go ahead, click on that boost button. Otherwise, have a good day, a good evening ahead, and we shall chat tomorrow morning. One other thing, tomorrow is non-farm payroll Friday. Thanks very much, guys. Speak to you tomorrow.